Welcome to the Insurance Producers Podcast, where we bring you the top personalized producers, insurance agents, and industry partners, giving you at least 3 takeaways to 10x your production and build your multi-million-dollar revenue books. So sit back, relax, and become inspired by the success stories and strategies of the world's top insurance minds. Let's roll. Hey everybody, welcome back to another episode of Insurance Producers Podcast. Hey, I've got a good friend of mine today, Zach Mefferd. What's happening, bud?
Hey man, how are you? Doing well.
Awesome. Hey, first I want to talk about ITC Vegas, man. We were both there. We saw a lot of our colleagues, a lot of our friends. How did it go, man?
It was good. It's overwhelming as always. I think that's one of those conferences where you leave and you kind of just need a minute just to unpack and try to figure out what you went through the whole time, because it can be a bit of triage, but that's the beauty of it too. I mean, there's just there's no other conference like it. It's the one place where you can see and connect with so many people that you're not only going to see there, that aren't at all the other conferences. So I really enjoy it. I look forward to going back next year. I always think I'm a little bit more prepared every year, and then I'm very quickly humbled by the fact that I'm not and need to do a better job. But I had a lot of fun, got to connect. It was good seeing you and connecting with some of the other friends, that I haven't seen in a long time. It's a great place to be.
That's funny, man. I love going to that conference because it definitely, I've only been to it one time, but I definitely got humbled because I go speak on stage. I'm like, okay, let's find a way to grow to 10 million in revenue. The one after me is like, I've grown it to 100 million in revenue. Now I'm going to show you how to get to 200 million. I'm like, dang it.
Yeah, I love it for that. I also wish that some people would maybe share their financials sometimes so we could see that how much of these people are telling us the truth and how many aren't. But you know how it is. I mean, it's one of those places that can be a little overwhelming, but you just got to take it in little chunks. And I don't know. I the first time I came back from that, I told my wife, I was like, this is the first conference where I felt completely at home. Like this, between the tech side of me and the way that my mind works and the insurance side, it's a perfect combination of both. So I really enjoy it. Like I said, I'm looking forward to next year. Is it in Vegas again next year? It is, I think, right?
I think so. Dude, you need a big place. You need a really big, I think it's like, I don't know. I heard numbers, but 5, 7, 8,000. I mean, lots of people.
It's wild. I just, like we were just saying right before we started here, Vegas is not my favorite place to be, but if I can make the most of it and try not to let Vegas get me, it's a good time.
Absolutely. And I encourage a lot of listeners that are listening to this, producers, agency owners, and tech people, carrier side. Man, I encourage you guys. I went to Indie Tech this year, which was an amazing event. Zach's been there before. We've talked about this in the past. Jason Cass and Mitch and all them put on a great event there, man. It was a lot of fun. ITC was a lot of fun. I encourage you guys to pick 1 or 2 every year. I don't like to go to more than a couple. But if you have the time, man, I encourage you guys to go meet some people and so many great ideas and it was a lot of fun, man. So
yeah, having gone to all the big ones now at least once, that would be the one that's like the pinnacle. Like that's the one to go to, in my opinion. It is a little bit more expensive, but it's an investment. And I think it's, you're just going to get so much more out of it. And I think it's okay to go into it knowing that, even if you pull 2 or 3 things out of it, that's enough. And then just go back next year. And I just like immersing myself in all of the different vendors and the halls of it, because there's so many things that I go there and I'm like, I would never have thought of this, or it's, maybe time over my head. I'm still trying to, I've got an AI hangover with all the AI talk that was out there. So, but again, it's a good place to go. And I think that's where, if you want to take your business to the next level, that's the type of people you want to be around.
Yeah. So Zach's going to introduce himself here in just one second, man. I want to brag a little bit about Zach, man, because he's done it really at a really high level on the independent agency side, being an agent. He has been a producer. He does come from captive side of things. He owns a technology company, man, that are doing amazing things. So he wears many different hats. So I'm excited to share some things with him, and I'm excited for him to share a lot of things with our audience. But first, let's go back, Zach, man, in 30 seconds, really quick, man, just so people don't know you. How did you got into what you're doing right now? And we'll go from there.
Yeah. So just like you, started my insurance career at State Farm. Really thankful for the opportunity that I had there, because I think I learned a lot about how to sell insurance the right way and do things, at a high level. But, I chose to go into the independent route. And at that time, I was just more interested in the commercial side of things. So I I moved back we were in the Chicagoland area, moved back to Iowa where I'm based, and ended up being a commercial insurance producer. Quickly became a top producer. Spent about 3 years there and was fortunate enough to meet my then co-founder, Ryan. Started a completely scratch agency with only one carrier in 2016. Fast forward a couple of years, we're trying to find larger and larger at-bat opportunities and really wanted to focus on the technology stack that was so fragmented. And we are fortunate enough to partner with the fourth largest credit union in Iowa. We created a proprietary tech, platform and workflow that allowed us to get more at-bats, less expensive leads and just a better funnel of leads. And so we built that out for them, started a completely scratch agency for the credit union, and then took that tech stack and started, we still have the option of being able to work with other credit unions all across the country. And then, as we transition to the Zip thing, I jokingly say, during COVID, my wife got a puppy and I got Zip bonds, right? Because I was, I guess, bored trying to find something else to do. And surety was one of those things that always was complicated for me. And as the further I grew my book and the bigger opportunities I would get on the commercial side, because I focused on contractors, surety just kept coming up. So I like to tell people I've worn all the hats. I've been everything from a CSR to a producer in personal lines to producer commercial lines to scratch agency owner. I sold my book of business and then started this whole tech platform and brokerage from scratch. And everything that I do and everything that our team focuses on is trying to make sure that we make things as simple as possible and do it from the perspective of the agency. Really lucky that at Zip Bonds here, we have someone from each side of things that are important. We have agency side people, we have underwriter people who come from the carrier side, and then we also have just technology, straight up technology people. And it's just a perfect mix of all three of those. But, that's been my journey over the last 10, 12 years now.
That's awesome. So let's dig a little bit deeper, man, on the Zip Bond thing, because if there's a lot of producers that listen to this, there's a lot of commercial people, and a lot of them obviously have a lot of different questions doing bonds, and obviously that's really complicated. Like, so for producers and agency owners, to kind of dummy it down a little bit, what does Zip Bond exactly do?
Yeah, so the easiest way I can explain it is my frustration as a commercial producer and then as an owner is I would start working on these larger and larger commercial accounts, and I could do the P&C stuff, in my sleep. That was fine. I was really good at that. On the CIC, I maintain it just because I think it's important to have, and I really enjoy the challenge of it. But what I found is that as I competed against some of these larger and larger shops, and as everyone knows with all this, acquisition, this M&A stuff that's happening, it just gets harder and harder for the smaller mom and pop shops to be able to compete. What I would find is that I would compete against these agents that had a benefits division. And then because I was focused on contractors, they also sometimes would have a surety division. I was always able to find a really good source of somebody who could run my benefits for me, and I could run quarterback. But basically, they were my subject matter expert. I'd bring them in on renewals or new business and say, we can handle all this for you. What I struggled to find is somebody that could be that person for me on the surety portion of it. So when I sought that out and I couldn't find it, it's like the light bulb went off. Around the same time, and it's funny you bring up ITC. It was in 2019 at ITC that the whole genesis of Zip Bonds kind of came about, because my then business partner at the time pointed out that was one of the things he didn't see, and that was the struggle that we had at ITC. And I guess fate would have it that we were at a carrier that was focused on surety that brought us in because we happened to be up in their area to talk about technology and wanted to kind of pick our brain as far as what's missing from the agency's perspective. And I'll never forget walking through that office and seeing these black screens with like the green, numbers and tabs that you'd have to use. And I don't know if you remember the old State Farm days where you had to like tab to go over. Mm-hmm. That's, like a COBOL type system. That's what it was. And that's kind of where my epiphany happened, where I said, look, if we're going to fix this issue, we have to fix it from both sides. Meaning when we built this out, even though we haven't monetized anything on the back end of what we built, we really built this out as if we were the carrier to try to figure out how to do things on the back end, our management system, if you will, that would connect as well to the front end to make things easier for the agent. So everything was focused on that, but it's a holistic. We can do everything from the back end, front end, and all the way around. But at the genesis of it really was I needed someone to be my subject matter expert for surety to help me close these bigger accounts. I think for the agencies that partner with us, they want to get the most value. They see us as a division of their business. This is somebody that says, hey, we partner with Zip because they help us take care of surety. And again, everything we do for those agents is focused on trying to make that process as simple and easy as possible for them.
That's awesome. And Zip Bonds has been around for 4 years now, right?
Yeah, we're coming up on it was 3.5 year at the end of the year. We officially launched June 1st of 2021. I'd say those first 6 months really were us just getting the main core system up and going. We
Mm,
didn't do a ton of business. So I like to think of like, the start of 22 is our first full year in business. So this will be 3 full years that we really have those metrics to see. And, thankfully, it's obviously a need in the market. It's been growing very quickly.
that's awesome. That's awesome. I love it. So let's talk a little bit about the credit union side of things, right?
Yeah.
So you guys have a large credit union, and you do, I'm assuming, a lot of home and auto from the credit
Yeah.
union that obviously comes to you. Yeah, how's that going, man, with the hard market and everything?
Well, it's not overly easy. I'll tell you that. I mean, it's, I'd be lying if I said that it was. On the coverage direct side, what we really were trying to figure out is, how do we find an affinity to help lower that cost of acquisition for those leads? And so, because at the time before we partnered with this credit union, we were getting a lot of leads from them
Hmm.
because, I was just doing what everyone does, goes out and tries to build out these networking relationships and trying to get these referral sources. And I mean, I think, the one thing that was a big, what a pivotal moment for us, I guess, in this is I just asked, like, why don't you have an agency?
Hmm.
I just wanted to know if there was a reason why they didn't want to be in insurance. And that's what started the conversation. So, my encouragement to anybody who has those affinities, whether it's car dealerships, mortgage brokers, credit unions, whatever, because it wasn't like they were the only one we ever asked. I just asked, why don't you have one? And would you be interested in getting one? And so right now in this market, we are still very fortunate that we've created APIs that allow us to get these leads funneled in where we get the at bat whenever a new product is being offered, whether it's a home mortgage, a HELOC, a auto loan, boat, RV, checking, savings account. But those leads come into our team, and our team then just handles them as basically a welcome call, introducing the member benefit of working with the agency that's now owned by the credit union.
Mm. Okay, so that's how. Okay, so your employees, just so we can confirm, your employees are employees of the credit union as well.
No, no, not. So what
Got it.
our model is a little bit unique right now in the way it's set up. So basically, we're an insurance agency as a service.
Got it.
So we control the contracts, we control the
Yeah.
platform, the people, and our current agreement is just set up as a service fee. So
Perfect.
when they acquired our book of business, they bought the commissions, right? The X dates, and then they just pay us based on the amount of performance and volume, a fee to be able to do it. And that was, at the time, very intentional in the way we wanted to do it. We wanted to try to create a business structure where we can control a little bit more of those margins, as
Hmm.
opposed to being at the mercy of whatever the carriers decided they wanted to do, whether it was lowering, new business, renewal business, commissions, and just being able to control that. And because of the market where it is right now, that, is transparency, it hasn't grown as quickly as we'd like it to. But we also, try not to overpromise and underdeliver. We want to find the right type of credit union. We want to find the right type of partner that buys into the idea of doing it. So we've been just right now trying to refine our processes and keep growing what we have and waiting for this market to kind of turn around a little bit, and we're starting to thankfully see that right now, which is good.
Yeah, give me a little bit of a background on that, man. So you're obviously in Iowa.
Mhm.
How has the market? Are you, in your opinion, man? In the third quarter, we're in the fourth quarter of the hard market. Like, how are things coming around with some of the carriers you're talking to, and how things are going?
Well, based on the KPIs that we track, right, I think they're a good indication. So we track PIF, we track premium force, we track lead volume and what we're getting. And that helps us figure out a couple things. One, do we have the right markets? Are we competitive in what we have? And we find that is the case. I think the biggest indicator for us right now is the amount of new business we're able to place, because we didn't have a volume issue of leads. We didn't have the at bats were there. It was just the underwriting guidelines were so restrictive. It was really hard to find and place things that were in a better spot than where they were, prior to that. So I think seeing some of these carriers finally figure out who they want to be and what their underwriting guidelines, letting a little bit of that reinsurance hangover kind of catch up, has really started to show. And we see that because our increase month over month is more in line with what we saw at the end of 21 and the beginning of 22. If you look at the end of 22 into 23, that's where we started to see that dip, right? Because the leads weren't going down, but the closed business was going down. The retention, though, was staying high for the premium in force. PIF has always been pretty close to the same, 80 to 90%, depending on month. Our average is somewhere in the mid 80s. But I think the real indicator for us is just that amount of new business we're able to close, because the percentages stay the same. The percentage of how many leads do we get to how many do we contact, and of the ones we contact, how many do we close? All of that stayed the same except for the contacted to closed. We just saw it dip down because at the end of the day, we just weren't able to find better options without sacrificing coverage. And so we kind of just hunkered down and just kept doing what we knew how to do really well, and trying to, I don't want to say cherry pick, but just, taking what the market would give us. Thankfully, most of the time, Iowa and surrounding states, as you probably know, being in a neighboring state, we're a little insulated to some of the larger things. I think what we saw here that we hadn't seen in years past is just the large amount of reinsurance increases that the carriers are taking on, as well as the change in the attachment points from those catastrophic losses. Because you look at some of the data and they go back to the catastrophic losses were historically happening in areas that they hadn't happened in before. So you take a place like, Omaha, where you're at, you're going to get, I should say it's like 3 to 5 years, right? You're going to get a huge hail loss. It's just, it's inevitable. It always happens. Well, that's predictable, right? 3 deratios in less than 2 years in Iowa, which was a place where nobody even knew what a derecho wasn't as predictable. And I think that's what a lot of the carriers are struggling with is, because there's such a long amount of time that they have to wait to make sure that they are right in their underwriting, adjustments. And we're just kind of still waiting that out. But again, I think all indicators are showing that things are finally turning around. I'm just thankful that, I say all the time, I'm thankful for the problems we have. This is a challenge and it's an issue, but premium retention staying where it needs to be, and we're starting to see that those new sales metrics are more in line with where they were in 21. So it tells me that we're coming out of it, and I hope that as long as that continues, we're going to have a record-breaking 2025.
That's awesome. I truly believe that. I think a lot of carriers, for the first time travelers came to me. I got an email this morning that said, "Hey, we really want to grow on auto this year. Can you give me some more quotes?" Where like 6 months ago, they're like, "Hey, just don't quote us right now," or "We're not in the rater." They're going back in the rater. Safeco wants more business. Nationwide's writing some auto now. Progressive's always wanted to grow. Geico wants to grow. I mean, you get a lot of these carriers that are honestly, man, auto owners and Allstate, obviously, are doing really well, or NatGen, whatever platform that you guys have, or anybody has. So I feel like, we're coming in, man. 2025 is going to be really good. I'm glad you made it till 20. If you're listening to this, man, you made it through. I would probably say, man, the last year has been the toughest for me. I don't want to speak for everybody else. It's been the toughest for me. And I would imagine it's been the toughest for everybody since I can remember, man. I've been in this for 13, 12 years or something like that. And I know people have saying, man, it's been the hardest they've ever experienced ever in insurance history from what we had to deal with, if that makes sense. And I want to just say that we're coming into the next one, right? Like next year is going to be so much better. We kind of got through I was really behind Zach I thought we could go and just be a new business organization and just write ourselves out of retention, write so much new business that retention wouldn't even be a problem. If that makes sense. I've always been that way, and I am completely wrong. We got our butts kicked the last 6 months.
So speaking of that, though, and I think someone in your position, because I know we've shared things, outside of this call, the larger you grow, right, the more challenging that becomes. And I know there are people listening to this that have been in the industry for a long time, like, well, duh, that's just math. Like, it just takes that. But you just don't expect, at least for us, we grew so quickly that we weren't used to that. And we were on the same trajectory. And you're going to run into that even in the best markets. But then to have the market harden up like it did at the same time was humbling. I mean, it's just reality. It's what it is. But I think that there's a lot of good things that come out of this. One is, if you can kind of embrace the suck for a little bit, because this will happen again if you stay in this long term, you're going to be better prepared for it. I think I don't think I am. I'm very fortunate that I have a network of, I wouldn't call them, mentors, but just a peer group of older agency owners who I can go to and say, hey, have you seen this before? And most of them will tell you, this is pretty tough. It's as tough as tough as I've seen anything else, but it does pass, and it will pass. And the ones that, can make it through are going to be better on the other side. I think it's cyclical in a lot of different markets, whether it's insurance or construction or whatever, where this does kind of weed out some of those people that aren't performing at their peak, and the ones that are, like I said, cream rises to the top. And I just think, again, things turning the right direction. If you get through it, then you're just gonna be better for it.
I love that. No, that's definitely the right way to do it. So, dude, I like I said, I lost some really, really good accounts, and I'm looking at my, looking at our KPIs, kind of what you do,
Yep.
and we're looking at our renewal rates, the retention and everything. And if we finally had to hire 2 people, and we have a whole rewrite team, and we reach out, we were very reactive on people that wanted to call us, like we'll reshop them, but like, cause we had 850 to 900 households a month that were renewing. And I'm like, man, like we don't have the bandwidth, and we're 4 or 5 years in. We don't have enough people to be able to like, and the lowest I saw was 22% increase.
Yeah.
All the way up to some I saw 4,000% increase. And this may be a Nebraska thing. Like other states are completely different, but we got kicked really hard. I mean, it's been really tough.
I know I shared that GIF with you here, GIF, or how you say it, with you earlier. But it kind of reminds me, I'm sure there's agencies that are in California or Florida, maybe even New York, it's like that James Franco, where he's sitting there and he's like, first time, because, we're finally seeing something that historically in the Midwest and, central regions that you haven't typically seen. But yeah, I mean, again, it was humbling, and I think we're better because of it, but it's just part of it. I mean, we were doing things on the insurance side from an underwriting perspective that the intentions, I think, were good, but the impact was maybe not as well thought out as was, like, if you have an 18-year-old roof and you're replacing it because you want to do the right thing by the consumer, and you're trying to create better coverage. Well, we can't keep replacing 18-year-old roofs all the time with total replacement costs and expect it just to not come out on the other side and be a mess. And so I think there are good things that came of that. And I think it's just that the whole market needed to adjust, and that's what we're living through right now. And that's why it's hardened up.
100%. And that's why it's so important, man, to reach out to other people that have done it for a long time. Like, I don't have a ton of industry friends, man. Like I've, cause I don't go to a lot of conferences. I haven't done a lot of face-to-face with a lot of industry friends. You have, and you've got some of these, but I still reach out to people, man, that come on our podcast that I've been friends with or see on social media, LinkedIn and stuff, to ask them about some of these things. And they give me exactly what you said, man. We're going to get through this, and it's going to be a lot better in 2025. And you know what? All those rates, everybody's taken. Like, there's no way. I was talking to Safeco this morning. I was like, guys, you guys are at $4,500 average household premium here in Nebraska, and on a $400,000 home. Like, there's no way you're going to get to $7,000 or $8,000. So there's no way it's going to double again. That's just not feasible. Like, people won't have insurance. It's just not. Nobody's going to pay $5,000 in the state of Nebraska. Now, obviously, Florida, Texas, California are laughing at us when we're having this conversation, but in Nebraska, man, the average premium was $1,800, $1,700. 3-4 years ago. So like going from that to like 5,000, it's a little bit of a shock in the last year, but we're going to get through it, man. I completely understand that, but you got to put a process behind it, right? Like, if you see some things that are not going well in your agency, man. So we had to come back and put some processes behind it. And I think we're going to get a hang of this, be more proactive than reactive.
Yeah. And so the other thing I'd add to it, I don't know what your current share of wallet looks like, but one of the things that we were intentional about because of the relationships that we had, again, it's a very much a relationship business, always will be. We had a lot of regional carriers, and some of those pulling out completely from personal lines because, when you peel the onion to why that is, because I'm very curious. I ask a lot of questions, especially when I can't figure something out, that's where I'm not afraid to ask. And if I sound stupid, I sound stupid. I don't care. But when they, really, those that were willing to share helped me understand that, even if they were to stay in that market and try to stay competitive and stay ahead of it, they just don't have enough data to be able to be as competitive. And I think that's why they're pulling out. And I don't fault them for that because they're making a business decision. But when you put so much trust and so much energy and so much of your effort into doing it, all of a sudden 3 of your top carriers are like either changing their underwriting guidelines or pulling from the state, it becomes really tough to say, okay, where do we take this? Because, 2-3 years ago, you just book roll it, right? That was what everyone would do. The book roll is like a dirty word now, you just don't do it.
I would tell you, man, there's a couple carriers I talked to this morning that said, hey, I'm interested in a book roll. So Not everybody. There's a
No,
couple of
but
them
it
that
has
will.
started. You're right. But I'm saying like last year when this was
Yes. Oh,
happening, it definitely
100%.
did not
Well,
happen.
they didn't even want to write business. They would call me. There's carriers that would call me and say, "Hey, I don't want that business. I don't want any business right now. Just like don't do anything." I'm like, dude, this is wild because we come from State Farm, right? The one thing about State Farm, and I appreciate most, they never take drastic changes. You would never see State Farm taking 30, 40%. It just does not happen.
Right.
They strategically, man, will take increases every year from what I've seen, 5%, 10%, 12%. Like their homeowners rate was at 4,000 for a long time. So we used to kick their butt for the last 3-4 years. Well, now all the independents are at 4,500. So now State Farm is becoming way more competitive because they had their auto figured out the whole time. The home they already knew because they're so smart with technology. They predicted this better than anybody. They had their homeowners rate in the state of Nebraska at 3,500, 4,000 to begin with 3-4 years ago. And we were laughing at them. And then now they're laughing at us because we're basically up there.
That's you're 100% right. Again, it comes down to data. They have more data and they knew how to use it. And I think one of the biggest lessons I learned through this whole process that I would encourage others to think about. There was a point with one of our regional carriers that they were writing. I was on one of their personal lines councils at the time, that they were so undervalued. It's like your actuarial has to be off. Fast forward 2.5 years, right? And all of a sudden, sure enough, they're the ones that are making the biggest changes. And the ones that weren't competitive and were constantly saying like, why can't you write more with us? And like, well, because you're 3 times more than the average you have with someone else. Now it come to find out like they were the ones that probably actuarially were doing the better job to be profitable. But it just kind of all caught up. And the fault I see in it is like, just maybe that I would have done something different or not, I don't know, but at least be aware of the fact that if you see it off by that much, you got to be aware of that because you got to know that the other shoe's going to drop at some point. Right. And that's what we're seeing.
Dude, I love that, man. I remember I told my team when I left State Farm on the independent channel, I was like, guys, like, I know you guys are seeing $1,200, $1,100 home policies with Nationwide. I would not. I would put a higher deductible on it because they were doing $1,000 deductible with some of these carriers. I was very weary of that. And obviously with what happened with Nationwide, with what they're doing and trying to figure out their rate, I think they will come ahead in 2025, man. I think they're a huge, massive company that you'd think that they would figure it out. And we're hoping, but I want to go to tech, man. I want to go to AI and tech.
Yeah.
A bunch of, before we end this conversation, man, cause you're obviously a guy that's in that world and you talk to a lot of these people. Everybody says this because this is like the new sexy thing to say is that like AI won't replace agents, but the agents that don't use AI will be replaced by the ones that do. I just want to ask you, man. Everybody says it. What does that mean for the dummies? Give us some perspective here.
So I will say first, I left Vegas being probably more confused about certain aspects of AI. It was like I said, it's an AI hangover because of how much people claim they can and can't do. And I think it's a gold rush right now. Like not everybody has it figured out. They're trying to figure it out. They know it's going to be important. And some people are, hyper focused on solving specific problems. Mm-hmm. Others are just being more general because they're waiting to figure out what's the niche that I haven't figured out that it's needed. So what I would say is I try to compare it to, when we started flipping things over to electronic forms, or we started flipping away to, take a comparative rater compared to putting in every individual agency system, right? I think the way that I see most useful, especially those doing large amounts of personal lines, is using tools that can simplify and expedite the process that you have of putting things in. So I think it can help somebody become more efficient. I think the people who focus on that, that's all you need to know right now. You don't have to understand everything that it does. Mm-hmm. It's still yet to be determined. But even something as simple as using like a chat GPT to help you come up with different templates for proposals to A/B test or things like that. Whatever you can do to use AI to be more efficient, I think is what most people need to be focused on. And I think it's okay to not understand everything, and it's okay to feel like you I don't want to say that you feel dumb, but you feel maybe a little ignorant of what it can and can't do, because I think a lot of people are there, and the people that are being honest are still trying to figure it out. Conceptually, I think a lot of people don't completely understand it, and some that really do are probably still trying to figure out what data sets and how they want to, utilize it. So again, your question of dumbing it down, I think what you need to focus on is, what can I use AI to help simplify my life and expedite the process to become more efficient? How can I use that to take the data that I already have and just create simple models to be able to create those KPIs, create those scorecard results for my team to be able to see, to track what they're doing. I think that's probably the easiest way to start now, and just be okay with the fact that you don't have it all figured out. Because I can tell you after ITC, I don't think there's somebody that has everything figured out with AI.
And I don't think there ever will be, man, to be honest with you. There were companies there, Zach, that are like billions, right? Like, I mean, I was sitting right next to on a panel, and I'm like, dude, why your companies have 1.2 billion in premium? Yeah. Like, it's wild. Some of the companies, agencies that were there, and they don't even have it figured out, right? Like, they have all the money in the world to be able to go figure it out. But I think what happens, man, is with agencies, what I'm seeing happening right now, and I'm curious on your perspective on this one as well, is a lot of people are like I went there and I would see all these shiny things. I'm like, you could do that for me. You could do that for me. You could, holy crap. Like, I'm coming back. I'm saying, okay, now we got to demo this. And I'm completely opposite of that, man. I want to focus on one thing. I want to simplify my team's life. I know these things are cool and all this stuff. They're shiny. They're things that could help you, but it could also take away from what you're really doing in your agency and distract you.
Yep, I agree. And so I would say, and I can speak to this firsthand, I was the shiny object, chasing butterflies, whatever you want to call it. And it gets to a point where it's you can add a bunch of really great things, but then it doesn't make your agency sustainable. And so you can't lose focus on the profitability of your agency, because at the end of the day, selling insurance is what is going to make you money. If you create a tech platform, depending on if it's a SaaS-based platform or like myself as a broker, there's things that you can integrate in there. And we're very intentional now about not putting something in that doesn't have a immediate or a very easy to calculate ROI, because you can just get overwhelmed. And again, it's cool. It's sexy. It sounds fun. It's great. And it is. It really is. It can be intoxicating, to be honest. But, if you don't pay attention to the bottom line, and that profitability and the ROI, then you're just going to put yourself at a point where you have a really, really cool agency or cool tool, gadget, whatever, but you're not making any more money, So why? I mean, and if that's what you're in it for, because you just enjoy it, then cool. It's a really great hobby for you to have. But I think that's a really good point, is that some people just get a little too overzealous trying to chase these different things. And then at the end of the day, it doesn't make any more money.
Yeah. I think if you look at your agency right now, like my agency right now, like, all I'm focused on right now is how do I make my agent's life easier right now to write new business, where there's so many different components to that. How do I go from, like, right now it takes them about 25 minutes or so. I want to get them to 15. I think 15 is a really good mark for us, 15 to 20 minutes. And then on the retention side, the second piece of it, I'm just trying to see if I can maybe gain an extra 5% in retention if possible. Those are the only things. Now, those are huge things. Everyone's like, oh, everybody wants to do that. But what are one or two things that I'm using today to be able to simplify those two things instead of focusing on all these other things and put them maybe on the back burner? Because, man, I'm overwhelmed every day that I come in, and my agents are as well.
Well, I like big goals, but if you don't have the little steps that get you to that big goal, then you're going to miss it completely. So I think it's a very, it's a very good way to set those smaller metrics to try to get there. You might say, like, hey, I want to get to that, let's call it 10% of whatever retention or whatever. But let's just start by getting to 2%. From 2, what do we learn there? How do we get to 5%? And just keep stair stepping, up to that point. I see that a lot with where, and again, you got to be able to track that ROI and where that comes through. And then what I think a lot of agencies should be doing is, practicing like an EOS system, or practicing some sort of way of benchmarking what you're doing, staying consistent, and tracking KPIs. If you're not, I don't remember who, I think it's Shark Tank. If you don't know, it was, what's his name?
Mr. Wonderful?
Marcus, Little Moses, is that right?
Yeah.
If you don't know numbers of your business, you don't know your business.
Yep.
You have to be tracking those KPIs. What's the, average churn? What's your quoted to sold? What's your, carry,
But they don't have the technology you have, Zach. A lot of people, they have the technology. Like, you have your technology. You kind of know everything inside of it. People, their management system and their CRM has these components you're talking about, but they still haven't figured out a way to go dig deep into the management system. There's many different things that, dude, we're only using 30% of what EasyLinks has to offer. There's so many other things, but people just like found these new shiny things and they forgot about what's really important, which is KPIs, dude. You really need to know these things.
So here's my devil's advocate to that, right? Like I would agree that. So I haven't hid the fact that almost everything we built out has used Salesforce as a conduit. People think of Salesforce as just a CRM.
Yep.
If you actually look at what Salesforce is capable of doing, it can be a Ferrari if you want it to be.
Yep.
But there's not a single thing that we have figured out how to do. Yes, it does now make it automated, more efficient, and it triggers these different workflows that make things more efficient for us. But at the end of the day, if I really peel the onion all the way down to it, I can track everything. If I want to do a more manual process, I can do almost everything manually in Excel. So even with an Excel spreadsheet, you could be able to figure out these KPIs that would at least give you a benchmark for your agency. It's just a little bit more manual. What technology has done for us is taken these core ideas of what we want to track, how we want to track it, and why it's important to us, because that's also something you have to consider, and just using a platform that allows you to automate and make things more streamlined. So you don't even think about it anymore because it's already there because you're not doing it manually. But at the end of the day, if I were, just the one, it was 2-man shop when we started, we still used Excel to figure those things out. We still track those things.
Right.
The other thing is it's having the discipline to do it. You have to do it. I think that's where so many people miss the mark is they have good intentions. They put the plan, but they're wearing too many hats. Yeah. They don't delegate and they don't figure out how to, put other people, traction calls it like let go of the vine, right? Like you have to be able to let go of the vine and be able to have other people be empowered to do those things and track those things for you. And then you can add it to the technology stuff. I mean, it's not like we decided day one that we were going to go jump into Salesforce and do this. It was a process.
I love that, man. Accountability is so important, man. And I don't know the number, but I wish I knew like what what percent of agencies know like exactly what their quote to close or call to quote or any of those KPIs, man. And if you don't, man, if you want to be successful in this industry, man, that's the number one thing you got to figure out. You got to go. Do you agree? Not agree?
Well, and I would say too, like what I've learned just to piggyback off that is we're always so focused on the sales side of things. And with what we built on our platform was, there wasn't, I've said forever, I love being in sales because there's always a scoreboard, if you're doing well or not well, right? But what we really used it for that helped us tremendously is tracking it on the service side of things too. Awesome. We have 2 separate basically orgs that track service versus sales that allow us to see how many of these, it's like a service ticket software, in these cases. We know how many people are handling how many cases. We know what one of those cases are a renewal, which one's a change of an auto, a filed claim. Every single thing is tracked to be able to do it. And that's where I think you can really take your agency to the next level is being able to track the stuff that happens after you make the sale. Sales are important, don't get me wrong, but you also want to make it efficient enough to be able to run. And so you keep that retention where it needs to be and continue to grow, because the bigger you get, the harder it is to grow and keep the retention where it needs to be.
And that's where we're falling into right now. We were just like, hey, let's grow for the last 4 or 5 years, man. All we've done is new business. And we're like, okay, now we're big. Now we're massive. Like, now how do you like fine tune it? Like, how do you figure out systems, processes, keep people from, because dude, 10% of my people leaving me is a massive number for me to replace with new business now.
Well, and I think to that point, what we found is it wasn't more of a like babysitting, big brother. It wasn't that at all. What we were able to uncover is coaching opportunities. Why does it take somebody 5 minutes to do something? It takes someone else 12 and a half minutes. Yeah. And it's because they're doing the process different. And you just don't know that unless you're tracking those things and you'll see it. And then creating consistent ways of training, everyone on the same thing and just, again, more efficient. But that's where technology can eventually help you. But, you don't have to jump in with all the bells and whistles right out of the gate. It's just get the core business figured out and then start using technology to implement the things to make that more efficient, more automated.
Love that, man. Even VAs, man. Like if you don't want to do it, you don't have the time, like just hire a VA and send them the data and have them put it in an Excel sheet for you if you really want to.
Right. And you tell me if you have a different experience, but if you want to have a good experience with VA, I don't care where you get it from, right? Yeah. Train them like they're actually on your team and be intentional about doing it as opposed to just throwing them in and expecting to understand what it is. So many people, I think, have a bad experience from VAs because they don't do a good job of training them the same way they would if somebody just came in the front door on their first day. And that's I think it's a real disservice because they're incredibly valuable if you put in the time, effort, and energy. And you got to understand, people learn differently.
Mm-hmm.
Me, you put me in front of a manual with a bunch of words, I'm going to be checked out page 3.
Mm-hmm.
Put me in front of a video where I can see it and I can try to have some hands-on training to be able to do it. You have to understand how those people learn and what they want to see, and especially since those people are not in your office every day, you have to train them in a way that fits their learning, the way they like to learn, and then also a way to make them feel included and a part of the team when they're sitting, sometimes thousands of miles away.
I love that, man. So, do you have anything else to share, man? I got a couple more last questions, and we got to call it good. Okay.
I'm just here to hang out with you. That's all I'm here to do.
I appreciate it, man. We could talk for hours, bro. There's so many different places I want to go.
That's what I love about this, is because I don't feel like I'm not pushing anything, right? I like connecting with guys and just recording the conversations. No different than if I picked up the phone and called you. It's just the same thing.
100%. That's what I love about podcasts, man. So, what would you say your definition of greatness is?
I've been thinking a lot about that lately, because once you get a certain amount of success, like the money's great, so to be able to the accolades, different things or whatnot. But I think I want to be just remembered for doing things the right way. Like, my idea of success is building out a business, being able to, I'm very family focused on everything I want to do. I never want to put my family, in a position where the success of my business is more important than them. And I'm okay if that makes me not the most successful businessman. I'm okay with that. I don't have any reservations, but I'd like to be able to see, people look back and say, like, that was a really good leader that I worked for. That was a guy that, had his stuff figured out and actually genuinely cared about people. We call it our 4 pillars that are here. And it jokingly came from, Ryan and I, when we first started, we sold an account that we were very capable of doing from a coverage perspective, because we had done it before, but it was so much larger than we probably should have taken on at the time, because we just didn't have the team to support it. But I jokingly said, if you do 4 things really well, you'll be better than 90% of your competition. Again, at the time it was a joke, but now it's part of our pillars. One was just be nice. It doesn't seem hard, but just be nice. Tell the truth always and immediately, especially when it's not in your best interest. You don't want to ever make somebody question your character or whether or not you're going to do right by them. Answer your phone, which we say now is be available. So, because we have multiple different ways of communicating. I tell you firsthand, that was one of the things that helped us. Is like, I would just answer the phone regardless of when it was, because I needed the business. But now we've created ways for our team to be able to get in contact, whether it's chat or email or whatever, and try to automate those things. And the last one is, we said it was give a shit, but it's genuinely care, right? I think, I look back to Duratio when I was taking call after call after call with claims, like that you put the phone down and it would be ringing before the phone was, on the hook. That person that was calling it that claim, it might have been the 15th claim that I took that day, but it was the first time they went through it, and just showing genuine empathy and caring. And I try to incorporate those core values into what we do with our team. So if someone's going through a hard time, whether it's personally or someone's trying to get to the next level, like, am I being nice? Am I telling them the truth, even when it's hard for them to hear, because I'm trying to coach them? Am I available for them when they need me to be? And do I genuinely care about their progression to the next? I want people to look back at me and being successful to be someone to say, hey, he embodied those core values.
Dude, I love that. And then last question for you, man. So how do you, on the personal side or the professional side, how do you win your day? Is there one thing in the morning, afternoon that you do personally and professionally to win your day?
Yeah. So as you can probably hear in my voice, I haven't been doing the best of the last couple of days because I'm trying to recover from whatever I caught in Vegas. But I am very much a first thing in the morning. It's not like it's a intentional like meditation or what. More like I was telling you before this, is just quiet time and be able to think through my day. I try to get the most difficult things that I want done, either done before I leave my house and come to the office, or at least have a plan of how I'm going to attack it when I get in here. If I miss that first part and it's like, 11:30 or lunch or whatever when I get there, and I haven't done those things, I feel like it just throws my whole day off. So I'm a very much a very early to rise type of person. I like to spend that first 20, 30 minutes, whether it's I take my dogs for a walk or work out or, just sit in silence and think through what it is. I have to process those things. So I think that would be the one thing that if I didn't have that, that would be really tough for me to be successful. I'm not, I'm a little all over the place with everything else, but that's the one thing that kind of grounds me and gets me to where I need to be, and just, being grateful and, like I said, thankful for the problems I have, because they're good problems.
Love that, man. Dude, Zach, this was a great conversation. I appreciate you being on, my man. We'll definitely have to bring you back on, because I think we can talk probably 4 more episodes. So appreciate you, man.